What moves market? Traders should consider. Perhaps the shorted outcome is the supply and demand. If demand or the instrument is the high, supply in short, the price will inevitably rise. If the concern is true, the price will fall. But how can we evaluate what has happened with the supply and demand, especially in the forex market, which is the decentralized and not overall transparent? One method we can utilize is to use the price data to get the handle on how money is flowing in the out of the instrument. And one of the more popular tools for doing this is the money flow index indicator. The money flow index indicator, MFI, is the momentum indicator that measure the flow of money into the and out of the society over the specified period of the time. It is related to be a relative strength index, RSI, but incorporates the volume, whereas the RSI only consider price. For this reason, some analysis call MFI the volume weight RSI. The MFI is calculated by the MFI is calculated by the accumulating positive and negative money flow values that creating a money ratio. The money ratio is then normalized into the MFI oscillator from. The indicator is typically calculated using 14 periods of the data and to use price and the volume, and the concept of accumulation and distribution being quite helpful in the confirmation trends in the price and warning to the potential reverse in the parties. So how to read money flow index MFI? When the current typical price, meaning high, low and the close, 3 is the higher than the previous typical price. It is considered positive money flow when the current typical price is lower than the previous typical price. It is considered negative money flow. Positive money flow represents the sum of the positive money other than the specified numbers of the periods. Negative money flow represents the sum of the negative money over the specified numbers of the period. Money flow index indicates the percentage of the positive money flow compared to the total money flow. MFI, the reading above the 80 is considered overbought, and MFI, the reader below the 20 is considered oversold. However, if you followed by the channel, you probably know by now what overbought and oversold doesn't necessarily mean the price will result, only that the price is near to the height or of the low. Its recent price ranging. The creators of the indications recommend using 90 and 10 levels of overbought and oversold levels. These levels are really reached, but when they receive often means the price could be due to the direction change. The MFI and RSI are very closely related. The main difference is what MFI incorporates volume, while the RSI does not. Traders rely mainly on the volume analysis, believe it is a leading indicator. Therefore, they also believe the MFI will provide signals and warn of the possible reversals in a more timely fashion. That the RSI one indicator is not better than the other. They are simply incorporated different elements and therefore provide signals at different times. But as it incorporates volume, the money flow index might give you the extra edge you need when you try to predict the future price movement. Okay, now let's see how to trade with the MFI indicator. As the money flow index is quite similar to RSI, the indicator can be used in a similar way. The MFI can offer traders several signals, the main of them being overbought or oversold conditions. As divergence moved below 10 or above the 90 and are quite rare. When the MFI is above the 90s, the price is considered overbought, and the reversal of the pullback could potentially occur. When the MFI is below 10, the price is considered oversold, and the reversal or the pullback might be a record on the market. It is important to remember that simply because the market reached the overbought or oversold levels does not mean that the picture will immediately reserve to the opposite way. During periods of the strong upward trends of the downtrends, market will remain in the overbought or oversold areas for the weeks or even months. That's why when the MFI hits or exact value 90 or the 10, the signaling overbought and oversold, you shouldn't buy it. We enter the could tend to the positions. You need to pay attention to the price actions, to recent market swing, to key support and resistance levels, and if you spot some sort of the confluence, then you should consider entering into the trade. The MFI should never be used on its own as the trade signal and must be used in conjunction with other tools of the analysis to make better informed trading decisions. Traders who use volume on their analysis often look to the divergence between the volume and the price. If the volume is trending one way while the price is trending in the opposite direction, it could be the leading indication of the upcoming change of the direction of the market. For example, if the price is making the new heights and MFI fails to make the new heights on falls, this is the bearish divergence and can be used to sell signals. Alternatively, if the price makes the new lows but the MFI fails to set the new lows or rise, this would be the bullish divergence. Since the MFI integrates volume data into the directions between the two directions of the indicators, and the price could be the leading signals. My preference is to combine these two approach to trade the money flow index, overbought and oversold levels, and divergence, and merge them into one signal and the future filter the signal with the trend line breakout. Here's the steps of the strategy. First, the money flow index must reach the overbought or oversold area at least once on the chart in the recent training period. I use 7 period MFI and not dreadful settings of the 14 period. The 7 period MFI will and increased significantly produced more signals. The second setup, divergence between the money flow index and the picture must occur during the recent period. I preferred to identify the main trend with the 2 period exponential moving average, and I only take the signals in the direction of the 200 EMA. If the price is trending below the 200 EMA, I plan to only short signals. If the price is trading above 200 EMA, I take only long signals. Then I search for the entires once the price breaks through the recent support or resistance level, or trend to the line, or change or channel. As well, can observe at the ATT example, this method offers reserve valid entries for buying positions as all conditions were met. Here's our first signal. First, the 200 period exponential moving average was pointing upwards, indicating a bullish trend. So we take only buy traders MFI reach the oversold area. We have the divergence between the MFI and the price, and the buy signals was confirmed after the trade line was broken to the upside. The second signals appeared here within the same conditions, and another signals here use spot stops should be placed below the recent market swing. And here the two short trades on Netflix. The first signal appears on the 200 period exponential moving average was pointing down to indicating a bearish trend, so we take only a short trade. MFI reach overbought area, we have the divergence between the MFI and the price. And the sell signal was confirmed after the trend in the line was broken to the upside. The second signals appeared here within the same conditions. We have the double top of the price but lower MFI reading plus the overbought level of the trending line breakouts. Here's another example of the valid trade using the money flow index, another way in which you could Use the money flow indicators is to the signals when the oscillator crosses the level 50 level. When the money flow crossover above the 50 level, this signals buying pressure coming into the market. When money flow index crossover below 50 level, this signals selling pressure of the 50 level crossover using the MFI with the dreadful value for the period will offer some good entries, but it also will generate many bad trades. The main problem with this method is that the market noise is generated, and traders by itself, this system is not reliable at the long run. That's why we have to just smooth on the indicators by calculating it to the longer period. If the previous strategy, I prefer to increase the significantly of the MFI by the reducing its values to 7. For this approach, I prefer to detail its sensitivity, and I do this my settings of the 50 period for the indicators. We also keep to the same filters for determining the trend, namely by the 200 period exponential moving average. Here is how it looks like. We added 200 period exponential moving average to the estimated the market's trend, and 50 period money flow index. We're planning to take the trades when the indicators crossovers at 50 period central, but don't take my settings for the graduated. Pay attention in the previous of the market, MFI, and even the previous of the AMA, and best settings suited for you trading styles. Here's the few traders example of the MFI conception crossover. If you learned something new and found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to stay notified when we upload next video soon. Until next time.